Action. Hey everybody. DJD FOREX here. And today's video is going to be my intraday strategy and how I look at the market, starting from top down. Hopefully this video should give you an insight into how I see the market and how I basically break down my charts and look for my entries when trading on a daily basis. Okay, so I'm going to start with my little checklists. Okay, so I will have a pre-market checklist, things I go through before I come to the charts, or maybe I look at this the night before. So my pre-market checklist consists of what is the trend? Am I looking for buys? Am I looking for sells? Are we in the main trend or are we in the counter trend? So just off the bat, just quickly, on the higher time frame. So I'm going to break down GJ. And just for the benefit of this video, don't actually take my trend line as an actual trend line for taking entries or anything like that. I'm just literally have drawn a trend line on the higher time frame, just literally pointing in the direction of the trend, just to give you an idea of what's pretty obvious is that we are obviously in an uptrend here. These little counter trend, I've done them in red just so it's plain for you to see, so we can differentiate between the two. So currently, if I'm looking at this chart from a higher time frame perspective, we are overall in an uptrend, but currently we are in a downtrend, right? A counter downtrend, right? Now, overall, I'm bullish on this. So just a little insight into the way I trade. Because of the main trend being up and bullish, I'm only looking for buys. Now, some people might criticize me for this, but I just like to keep things very simple. Even in an obvious counter trend like this, which is going down, right, we can clearly see that we're making lower. We're making lower highs, yeah? Lower highs, lower highs, lower highs, lower highs, right? It's clear we're going down, but just to make things simple, I trade bounces back up. So I know that's coming down, but to make things simple, my move will always be the same, whether we're going in a downtrend or an uptrend, even when we're in the main trend or the counter. But obviously, when we're going with the trend, so for example, like these moves from here going up here, you can hold them a bit longer, and the pushes seem to be a bit bigger. But in a counter, I'm still able to catch 50 to 60 pips off a bounce. So I just generally keep it simple by just always buying. Obviously, in a counter, my buys and my pushes are not as big, but I'm still just looking for the same confluences. So I'm doubling down basically on the amount of chart hours I'm looking for my particular move, which never changes. So basically, it just allows me to be more consistent and become, I don't know, maybe an expert in my move because it never changes. I'm never looking to sell from here. Although it is clear to see that the counter is coming down. I just find that I just keep it very simple. I do the same thing every single day. So um, cool. So just to clear that one up, that's what I look for and that's what I trade. Let's just go through some more of the pre-market checklists here. What does the previous daily candle tell us? So once we've identified, the trend, the counter trend and the trend, even though I only look for buys, the daily candle can really give you an insight into what's going to happen the next day, right? So I'm going to give you an example about this. I'm going to give you an example. Here's a great example. Here's a really good example. The previous daily candle. So let's just look at this candle here, right? This candle is a hammer, not a bullish hammer, but it's still a bearish candle. So it's been pushed down. There's buyer's rejection, right? It's been pushed back up, and then the next day we got a green candle that engulfed this candle. So if we were at this point, um, if we were at this point, if this was where we were like this, yeah. So say the day closed like this, right? And I come to the market and I don't know what's going to happen here. Quite simply, I will be looking for price to come back and retest here. So this candle gives me an idea that we're going up, but we must come back to retest this level, right? And it will give me an obvious trade. So I'll be looking for literally that. That's what I'm looking for, right? Now, just quickly, let's just replay and just get rid of the replay tool and see what happened. Yeah, let's get rid of it. Okay, but did we get that? Yes, we did. So if we have a look here, the daily candles can pretty much give you an idea of directional bias for the next day. Let me get rid of this. Sorry. Bang, bang. Can you see what happened? So this did come push down. Okay, it came past this level, but it got its retest. It got pushed down and then shot back up. So on this day, I was looking for price to literally come down and shoot back up, and that's what happened, right? So it hit this support here and it shot back up. Easy trade that day. Easy trade, right? So that's one thing I look at. That's one thing I look at. Let's get back to my checklist. All right, cool. Okay, cool. Let's go through the checklist again. All right, cool. Liquidity. Where is the liquidity? So again, when we jump down to the smaller time frame, I'll expand on that a little bit more. But looking for basically where the liquidity is going to be really important for our trade for that day, because generally the way I see the market is, which I will go into a bit more detail, but generally the way I see the market moving is, if we have a general trend that's going up, right? What I look for is price to make its way towards liquidity, take the liquidity, and then continue to where it wants to go, right? That's generally how I see the market. The market has a short-term goal and a long-term goal. So using this example, the daily candle example, price wanted to make its move up, but first it wanted to take liquidity and keep it moving. So it will have a short-term goal and a long-term goal. So that's what I mean by liquidity. We'll go into more detail when we actually get down to the smaller time frame. The next thing I do is I pre-qualify my areas of interest. I do have a checklist to go through, which I'll go through in a minute, which allows me to pre-qualify an area of interest. And I've plural here because there could be a few. Also, I have to predetermine my risk for the day. So once I've identified a few levels that I think that price potentially could go to before it makes its move, I will then start to predetermine the risk for the day, meaning, so for example here, if we've got two areas of interest that I've identified as potential areas that price could make its move to and then keep going, if there's say like two, right? One there, say one there, right? So I believe that price is going to make its way to that and keep going. I will then calculate what I'm prepared to risk for that day, or what potentially my account can handle. So if there are two areas of interest, fair enough, then I may do the calculation based on two. So if I'm prepared to risk, say, 1% of my account for that day, I could split the 1% over two. So that would be 0.5% of my account for those two trades. But you've always got to remember anything can happen. So generally, depending on where my account's at and what buffers I've got in terms of profit, I generally trade with 0.25% per attempt. So you could have maybe 4 attempts at 0.25% to get to your 1% for the day, 2 attempts at 0.5%. But just generally, it depends what kind. It really depends. It really depends on the day. The intraday strategy and intraday move I'm going to show you, I normally nail it within a couple of attempts anyway. So it all really depends where I'm at, as to how many attempts I think I may have to take on a trade to nail it. And then obviously I'll calculate my predetermined risk for what I think could happen. So if I think there's 5 places that this potential trade could happen, I'm not going to be using 0.5% per attempt. I'm going to be keeping it quite small per attempt. So it'll be 0.25%. Right. So these are the pre-market some of the pre-market things I go through. Also news. Sorry, I missed that one out. News. If there's news, I do not trade until after the news. And if I miss the move and it happens before the news, great, I miss it. That's not a problem. Because I'll tell you what it is. A lot of people try and trade the news. I do not play with the news. If there is news, red folder news of any country, I do not trade until that is done. And the way I actually trade it is I wait for the news to happen. I identify where the liquidity is, and then I wait for the news to happen. Normally, the news will say right range. Say this is like the session. It ranges throughout the session before the news. Then after the news, collect liquidity and then go, right? So that was what it wanted. And then what I wait for is I wait for the spreads to actually calm down. So what actually happens is during the news, the spreads will go wild. So the spreads can go anywhere up to sort of 10 to 15. That's when I know that there's movement and there's chaos. Now I will look at what the spreads were before the news. Normally with GJ, it's around 2.5, 2.7 on the Oanda chart. And once the spreads settle down, I know that the coast is clear, then I will look to see if liquidity has been taken. Generally, if it wicks down, takes that liquidity and then just kind of consolidates for a bit, I know that it's taken what it wanted, it's going to shoot off. So if the spreads have dropped down, I will then take a buy and then it will just shoot off or do whatever it does. But before the news, I do not enter before the news. I wait for the news to do what it wants to do. Unless it's made a significant impulsive move down towards the liquidity, already taken it, and then the news is basically going to send it. So that does happen sometimes, but it really all depends. You have to actually make that decision on the day. Okay, cool. So these are my pre-market checklists. That's pretty much the things I go through before I get into my trades. Now I'm gonna break down the chart. I'm gonna break down the chart. So let's get rid of this. Let's get him out of there. The next part of the video is going to be how to predetermine my areas of interest. Right, so we're gonna go right down. Okay, right. So we need to identify our areas of interest. Let's just get this over here. One sec. Okay, cool. So basically, when I'm looking to take a trade, I'll go right from the higher time frame down to the lower. The higher time frame stuff obviously is more solid. So, for example, you see these levels; they are more likely to get respected because they've been drawn out on the higher time frame. So if you can do your higher time frame analysis, draw your lines, do your technical analysis on the higher time frames, they are more likely to get respected. So then when you come down to the smaller time frames, you can basically expect your technical analysis to be respected. So I generally start from the top. So just to make the video as efficient as possible, I've already drawn the levels, right? Now these two levels here are quite important for the trade I'm going to go through. So you see this level here and this level here. These trend lines, they're just for the benefit of seeing the counter and the main trend. So I'm actually going to get rid of those. Actually, no, I'll leave them on there. So I've got to do another video after this. But the two levels that we're going to basically use today is this level here, right? Which you can identify by just seeing that it was once a resistance. It came back up, resistance again, and now it's come back down. It's now acting as support, right? So this is basically what I mean by a valid demand zone or support. But let me just get rid of this. Right, let's jump down. Let's jump down and look at this. Look at what's happening here. Okay, cool. Okay, cool. So can you see how I've drawn this level? Can you see the wicks, right? So this box is basically the top to bottom of the wicks sitting on top of the candle bodies, right? Can you see how price is coming into here, acting as support here, coming down, pushing up, being rejected, getting pushed up, coming up here, being rejected. It doesn't have to be perfect, but what you have to do with your levels is you just have to basically try and incorporate as much price action as possible. So again, look, you can see that the wicks came into this area. So basically what the level means is it basically, oops, we've lost the video. What it basically means is that price comes to this area and gets a very aggressive reaction from it. So for taking your trade, this is just basically an area where basically you can expect to see, like you can see here, rejection. It's come in, hit that one, gone back up, consolidated here, pushed up, come down, wicks. So all these wicks are telling us that basically price is coming into this area and being rejected and getting pushed back out. So when looking for my trade, taking a buy off of a higher time frame level like this is basically going to give you a better probability of this level holding if you're looking for buyers to go up. So yeah, so this is what my checklist is for areas of interest. So I go through this list and I basically try to build a case as to why this area is going to hold and can I take a buy from this area, right? Quarter points is another tool I use. So a quarter point is like this. So the quarter point that's around here, well, there'll be a few. The quarter point that seems to be holding is, I think it's the 750 coordinates. The 182.750 is, okay. So that's what a quarter point looks like. Quarter points are whole numbers. 182.750, right? So this quarter point's been being respected quite a lot. It's holding very well. It's getting weak rejections. So as you can see, what I'm starting to do is pre-qualify this level of support. So do I have a valid demand zone / support here? Yes, I do. I have this level, right? Do I have a quarter point? Yes, I do. A fib level. I'm going to quickly draw the fib levels on in a minute. I'll do that next. But one easy other confluence I use is a 50 EMA, but I don't use them. I use a 50 EMA for support, right? Higher time frame. So a 4 hour, a 8 hour, or a daily 50 EMA. In this case, can you see that? Okay, so the 50 EMA is acting as support here. Can you see that? So that's the only time I use EMAs, when I use them for support, right? So sometimes I'll just do this, bang. Click on this, on the daily. Templates, daily 50 EMA, right? Daily 50 EMA, okay? This is now adding, I'm now building a case. So I now have 3 confluences. I have a QP, a daily 50 EMA, and a valid demand zone here, right? This is 3 confluences as an argument to basically base my case that I feel this is a valid level of support that I would like to take a buy from. So let's jump down. Let me just move you out of the way. All right, let's get rid of the 50, right? Now that we've marked it out. So he's on there. He's chilling. Let's get rid of, actually, let's leave it on there. Let's move you back there. Okay, let's jump back down. All right, actually, no, let's jump back up because I've got to draw the fib. All right. Okay, I'm not going to go through why I put my fib here. I'm just going to draw the fib that is most relevant to my trade. All right. The fibs, I'll do another video. The fib I'm using on this time frame is there. It's that. Hold on. All right, bang. Okay, point A, point B, and we're basically chilling on the 61.8. Right, 61.8 is acting as support. Right. So point A, point B. I'll do another video about how to draw a fib, but just for the benefit of trying to keep this video as interesting, as punchy as possible, that's what I know that the fib is there. So point A, point B, pull back. So potentially this is a valid level of support. We've got 4 confluences, right? So buys from here for the continuation up, right, are pretty, the confluences are stacking. So I'm pretty confident that around this area, if I get like a higher time frame price action signal, we could potentially get a reversal in this area. Now, just off the bat, like now, I can see a W forming, right? Now, what I'd like to see is this. Okay, now on the smaller time frame, I'll go through entries and you'll understand what I mean by a double bottom, exhaustion, a failed low, all that stuff I'll go through. It's a little bit more common on a smaller time frame because we see it every day and we use it for our entries. But just on this, a double bottom with exhaustion and the second leg like that, it's a very bullish sign that this potentially could be the bottom, and this level is holding, and now the uptrend could continue, right? So this is actually looking good for a swing trade. Okay, cool. So let's just quickly recap. let's just quickly recap. Let's just keep this punchy, right? What I'm trying to identify here, okay, is this a valid area of interest? Okay, do I have a valid demand zone / support? Yes, I do, right? Do I have a quarter point? Yes, I do. 182,750 being respected. Do we have a fib level? Yes, 61.8. The golden area. This is the area that most people that basically has the highest probability of being respected. Is between these two. Okay. Do we have a higher time frame 50 MA? Yes, we've got the daily, probably the strongest out of all. Now, basically, what you need to, it's all well and good having all these confluences, but what you need to take into consideration is have the orders been filled in this area? So price could get to here and not have wicked and taken out what was all here. So one thing is, price can come to here and it hasn't cleared the orders yet. So the fact that we've got wicks, all of this has had its touch, right? So one thing, just to make sure, just to be clear, just because price comes to here does not mean it's done. All right. So the fact that we've had multiple rejections off of all of these levels of support basically gives me the indication that pretty much the orders here have been cleared. So when this is done and finished, then it will make its move. But until then, you can't just take a buy when it comes here. You really have to allow it to do what it wants to do, exhaust, and then basically clear the orders and then make its move to the upside, if that's what's going to happen, right? So just because it comes here doesn't mean it's done. So just because you got a wick here doesn't mean it's over, it's done. It's going to have to, on a higher time frame, if you're doing analysis on your higher time frame, it's going to take a little bit longer to play out. So you're going to have to expect that that's probably going to do that, go up, come down. It could even keep doing this for another day, right? And then it could wick down there and then it could make its move, that if that's what's going to happen, right? So what we're doing is just building our case for basically a valid level of support, which, to be fair, this is actually looking pretty good for me to be building a bias for buys. Right. So now that we've gone through our checklist of areas for area of interest, and we're pretty happy that this is at a good level, then I will go down into the lower time frames. I'm going to go through one example on this video, and then I'm going to go through another example on another video, but I'm going to keep the top-down analysis just on this video so we can keep this short and punchy and people can try and take the value from this without me chewing your ears off a bit too much and you losing interest. So I'm going to jump down now and we're going to go to entries, all right? So, oops, get rid of that. So let's just recap, guys. So we have a pre-market checklist, okay, to give us an idea of our directional bias for the day. Okay, we check the news, we check the previous day candle. We also predetermine what risk, what our accounts can afford to take. Once we've predetermined our levels, what we're prepared to risk at those levels. So predetermining the risk, and then once. But also, well, not once we've done that, but the next thing we do is then start to basically look at our areas of interest, and that kind of goes hand in hand with what the pre-market checklist. You kind of also need to check your levels and check where your trade could potentially happen for that day. So these two work hand in hand, and then then you wait for your ideal entry, or you wait for price to get into your area of interest, and that's when you start to get down onto the confluences for an entry, which we're going to go through in a minute, and we're just going to actually do a live trade using the backtesting tool, and I'm going to try and show you guys what I see, why I took my why I would take a trade, and it doesn't always happen on the first attempt as well. Psychology and thinking in probabilities is a whole nother subject, but just for today it's just a bit of a breakdown, and to give you a little insight into what I see and why I take my trades. So moving on to the next, I'm just going to move this little guy, get rid of him, and we're going to pull the other one for entries. Oh, where is he going? Okay, where's entries? Oh wow, oh there he is. All right, entries. Okay, let's go. Let's put him up there. Sorry guys, I'm going to try to keep this as punchy as possible. I'm going to try and explain and articulate everything as best I can. Okay, right, let's go down Is this right? We'll leave all of this on here because it's not bad. It's not that bad. Right. I'm gonna jump to the 30-minute. Okay, let's push this up here. All right, cool. So I'm gonna go through. So I have two plays in my playbook, right? Very simple. Two things the market can do when it opens in the London session. It can either push up or it can drop, right? So I literally call them my two plays, either a London push or a London drop. It's one or the other. It's either going up or down, right? I'm going to give you the most textbook example of a London drop, and we're going to trade it. All right, a London drop. Let's find a nice London drop. Oh, perfect. Look at that one. Look at it. All right, there we go. Okay, we're going to trade this one. This is a London drop. So we're going to, this was Tuesday, the 12th of September, right? So let's just put our little list here. Cool. Right. All right. The London, this London drop. Okay, cool. So once we've marked out our areas of interest, right? So at this level, so at this area, we had this green box, which was the level that we spoke about, right? I'm sure we can find a QP. Let me just get the QPs up on here. Okay, let's have a look. What QP did we have? I don't know off the bat. Hold on. I'll have to go into coordinates quickly. Okay, right, there we go. We got 183 flat. Okay, cool. Whole number. Bang. Oh, look at it. Okay. My whole numbers I do in green. Okay. Right, so cool. So we have literally two confluences, right? Liquidity is here. This area has liquidity in it, right? That 183 and this level, right? They both have liquidity. So let's just, sorry, I just want to make this a bit more clearer and uncongested for you guys. Right, can you see that? Make this smaller. All right, do you know what, guys? You're just gonna have to just deal with it. It's not clear because there's stuff behind it, but it is what it is. Do you know what? Actually, we can delete these. Why not? Cool. Okay, cool. You might be able to see that a bit better. Trying to make this perfect. I know it's not going to be perfect. It's my second YouTube video, but we move. All right, cool. So basically, when I come to the market, I've already predetermined the levels that I'm looking for, right? Now, one thing, okay, so just to quickly look at the previous days, we had a bit of a downtrend here. We had a bit of a down push, yeah? We're coming down, right? Clearly coming down, right? Now, it made a low here, and then it started to push up. Now, off of this level, I was expecting a reaction, right? So this could potentially have been a higher low, right, on the higher time frame, right? So I would have drawn a fib, a smaller time frame fib. Now, I don't advise you to use smaller time frame fibs too tough, but they do give you an indication of a pullback, and it is another confluence, right? So I would draw a fib from here to the top. Okay. Let's get rid of that. Let's clean this up. Okay, we do have a fib. Okay, so we do have another confluence. All right, let's look at this. Okay, cool. There's your point A. There's your high. This didn't break this, okay? This wick did not break this, so this fib is still valid, all right? So I know we came down here and we had like maybe a point A, point B, point C, but because this did not break this fib is still valid, right? So this wanted to go lower, right? And look what happened. It ended up retracing back to the 61.8. So for me, this area, okay, and also we got the 78.6 here. It didn't quite touch it, but it's close. It's in the golden zone, right? So for me, I've already got three confluences. Like price has made an impulse move towards liquidity, right? Liquidity is here. These levels, these are liquidity, right? The reason they're liquidity is because other traders are seeing the same thing I'm seeing. There's another trader who's put a fib there from point A to point B, right? And it's pulled back to here, and he's looking for buys here, right? There are there are orders here that need to be activated, right? There are other traders here who are also seeing what I see, and now they are also going to take buys from here. So that is why that is called. That's why that is basically liquidity. Also, another thing to take into consideration with intraday trading, right, is you have to identify where liquidity is. Now, I can tell you for a fact, yeah, there would have been people buying here, 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 right? This push, this impulse movement towards this level here, took out anyone that was here. So there would have been other traders, right, in buys here, right? Some of them would have put stop loss to break even. Some of them would have had a maybe a, you know, a 10 pip stop loss or something like that, right? Okay. So when this impulse move pushed down, it took out these guys and it took out these guys, right? So that is also liquidity, right? That is what price is doing. It's making its way around the chart, taking out liquidity, activating sell orders, buy orders, stop losses, everything, right? It's just hungry for liquidity. That's what the job is of price. It's looking for liquidity, right? So this could be called internal. I wouldn't call that internal market structure break. I guess it is, but it's, you know, I wouldn't like, you wouldn't trade from that there to there, to be honest with you. All right, so let's just say it's liquidity. Right, cool. Okay, so the first thing we're looking for is where is the liquidity on the chart? Do we have confluences, right? So basically, it makes this move towards liquidity here. And when it gets into my area of interest, right, I'm now looking for a price action signal. So what I'm looking for, right, because I'm looking for buys, right, because I am bullish, right, I'm looking for buys, right? Now, one thing that's important about intraday trading is the relationship with the previous day's low. Okay, so that, oops, that is the previous day's low. Okay, so if price breaks the previous day's low, yeah, and retests and goes down, then we're going down. Okay, but the fact that the previous day's low was respected and didn't go down, okay, the fact that we made like a failed low, right? So almost like a double bottom, yeah. The fact that we made a failed low tells me we're potentially going up. So when price gets to this area, it's important because if it breaks here, we're going down. But if it holds, we potentially start somewhat of an uptrend, right? So it's quite crucial that this holds, okay? Okay, right, let's get to it. Let's get into it. Right, so it's very important that you are looking to see what's happening here. Right, sorry, I've completed, the list has gone out the window. I've just started blabbing. Let's just go through this list quickly. Right, has the market made an impulsive move towards liquidity? Yes. Okay, liquidity was there, got taken out. Liquidity was there. Okay, do we have exhaustion at our area of interest? All right, so basically we will flick through timeframes looking for exhaustion. That's the first thing you need to be looking for when you take an entry. So I like to the higher the better. If you get exhaustion on a 1 hour, great, before your entry, amazing. If you can get exhaustion on a 15, 30, 45-minute, great, but really the higher the better. So you would just basically be looking for exhaustion. So once price gets to your area of interest, you need exhaustion. That's the main thing you're looking for, exhaustion, right? Do we have a price action signal at our pre-qualified level? So we have pre-qualified this level already, right? We've got three confluences here. We've got our QP, we've got our fib level, and we've got our level of what called, some people call it a demand, support and resistance, whatever it is. This is a level of support, all right? So do we have a price action signal at our pre-qualified level? That's what we're going to identify now, and I'm going to show you how to do that. Another thing, have the orders been activated? So it's all well and good price coming here, okay? Okay, so just because price comes here, it doesn't mean it's done yet. It can still push down, activate the orders, right? So that's what it's coming for, to activate the orders. So the fact that price has come to this level, as you can see there, if we zoom in a little bit, right? These wicks have activated any orders at the 183 flat, all right? So can you see that that wick has pushed into it and taken liquidity? So orders have been activated, all right? That's something that's quite important because price can come here. Okay, so let's just have a little look, all right? Let's just have a little look at this. Hold on 1 second. Right. All right. Here's a good example, right? Can you see this wick? Oops. What's just happened there? Can you see this wick? That has not activated these orders, right? It's not ready yet. So this wick is what you want to see. Big push into the liquidity, bang. All right. All the buy orders have been activated, right? Bang. That's what you want to see. Price pushing into liquidity. Okay. That's one thing, right? So always have that in mind because it can trick you because it could, you know, here's an example. Look, here's another example. Okay, price has come to the 183. So this is the 183 flat, right? Price has come to it, right? But it's pushed down into this liquidity. So now it's had a good old push and it's done, all right? So at this area, people could have been taking buys, but it's not finished yet. So it's pushing down more. So basically you want to be aware of have the orders been activated because just because it comes to this area, it doesn't mean it's done. It's come here for a reason. It's not just going to half-ass and just stop there. It wants to push into it before it goes. All right. All right, cool. Right, so let's go through our list again. Have the orders been activated before price is ready to make its move? That's the question you need to ask yourself. All right, and what is the relationship? We spoke briefly on it. What is the relationship between the current price and low of the day and low of the week? All right, so that's quite important because, like I said, if it breaks this red line, the trade idea is invalid. All right, but what can happen and what does happen is price can come all the way down, take the liquidity that's underneath here. Okay, so and when I say liquidity, what I mean by liquidity is guys who caught this have got their stop losses, you know, look at 25 pips below, right? Guys who have their stop losses 25 pips below their entry, or even some guys who have stop loss to break even, right? Price can come down, activate their sell stops, their stop losses, right? Their sell orders, whatever, and then continue. And that happens all the time with GJ. GJ moves like that. It's greedy for liquidity. Nothing's safe, right? So what is the relationship between price and previous low of the day? Okay, the fact that it respected it gives me an indication that we're going up, right? So at this level, I would have taken a buy for definite, but I would have been bearing in mind that the price can come down, and the distance between there and there is quite big. So literally, yeah, look, see, 50 pips. Like you can't be holding a buy here, hoping that it's gonna turn around. You would have had to have your stop loss underneath here, and then if it gets clapped out, fine, happy days. You keep moving, and then you go lower. Okay, cool. So we're gonna actually trade this, right? I'm gonna trade this, and then I'm also gonna add something into our confluences, which is the breakout line. But I'm going to trade this, show you what a breakout line looks like, and then I'm going to add it to this one. So I'm not going to trade this one, but the previous day's breakout line is a very, very, very easy target for liquidity. Again, I'll draw it on and I'll show you where it is. The breakout line is there, right? This line, I'm just going to make it black for now. Right, this is the previous day's breakout line, and can you see how price wicked it? Right, I'm going to show you how to draw a breakout line on this one, right? But just know a breakout line is a liquidity target. Again, I'll tell you why, because that is where people would have entered, right? And over the course of this duration here, people will put their stop loss to break even. So this becomes a really easy target for liquidity. So when price makes its move down to liquidity, that is probably what it came back for, the retest of this breakout line. Okay, I see it every single day on GJ. It becomes a target. Price will eventually come back for that, always, because it's just easy money because of these guys. They put stop loss to break even and think they're in a swing trade. Used to be me. Okay, cool. So we'll leave this breakout line on here, but this actually becomes a confluence, all right? It becomes a confluence. So what you need to, so one thing you need to take into consideration when intraday trading is the relationship between the low of the day, previous low of the day, right? Point of invalidation, basically, because if that breaks that, we're going down, okay? But if that holds, we're good. The the relationship between the previous low of the day and the breakout line from the previous day, okay? Because it is a liquidity target. So please just remember, the breakout line from the previous day is a liquidity target, and you must leave it on your chart. I always leave the previous breakout line on my chart. So if I caught this trade, which I probably did, I don't really miss much on GJ, but if I would have caught this, right, the day before, I'm leaving this because I know it's coming back for it, okay? And this is why it's a bit difficult to swing trade GJ unless you know what you're doing, right? Because she will come back for liquidity, okay? I have a swing strategy where I use indexes. Oops, we've lost. We have a swing strategy where we use indexes, right? So that's how we identify which ones which are safe to hold. But generally, the breakout line is coming back for it the next day. So you don't really want to be putting stop loss to break even. You want to be out after the first push, to be honest with you. That is my intraday strategy anyway. So we'll go more into where we TP in a minute after we trade this one live. Okay, cool. So let's actually trade this one, right? Let's do it with the replay tool. Right, cool. So here we go. Bang. Look, this is what I love to see, right? Hold on, let me just move this down. And I'm going to talk you through it. I'm going to talk you through it. Right. So I come to the market at this time, right? And okay, hold on, let me just check the time, guys. How long have we been? How long we got left? Okay, let me try to do this as quickly as possible. Right. I come to the market around this time, okay? I catch the last hour of the Asian session, right? Price is making its way down. It's clapped the liquidity here, which is a good sign. This is good for me, right? So we've got liquidity underneath here. It's been taken out, yeah, by this, right? Bang. Everyone's stop loss activated. Sell orders activated, whatever. There's liquidity here, right? Price is coming down. It's coming to our area of interest. It's coming to our previous day breakout line, right? So let's press play. Right, now, boom. Okay, hold on. Right, bang. Right, the first thing I'm doing is I'm looking for exhaustion, okay? The fact that I got a reaction here, right, tells me that this potentially could be somewhat an area where we're going to get, you know, potential reversal. So now I'm going to jump down. Once I would have seen this, a green candle, right, I would be jumping down onto the 1 minute chart, right? And now my entry strategy is very simple, right? Price has to come into the liquidity, into my area of interest, and then give me a reversal pattern, right? Now, what I do is this. So we're on the 1 minute chart, right? Very simple, very simple. I will mark out market structure, right? And I'm looking for, some people call it a chooch or a break of structure or whatever. I just basically call it a reversal pattern, like a double bomb, right? Bang. Okay, we're coming down, we're coming down. Right now, one thing you've got to notice about this, right, is that the bearish candles that were once big pushing us down are starting to get smaller. Can you see them? Look at them, little squidgy little baby candles, right? Okay, that one's a big one, right? But can you see how basically the momentum that was pushing down is now starting to reverse, right? Because what's happening is price has made this impulsive move towards liquidity, and now it's got what it wants. It's activated the orders. It's going to allow the bulls to take over and go back up, right? So let's what I like. So okay, let's. This isn't done yet. Well, let's let it keep going, right? Okay, we're done. Okay, cool. So it starts to make its way back up. Is it? All right. So what I would have been doing, right, is making my market structures, right? Now, let's just redo it. Okay, cool. So as price is coming down, right, doing this, I'm starting to get the rejection of this area, right? I'm looking for a failed low and a reversal, right? Which I can see is there, right? So what I do, the first thing I do, which is an obvious thing, is I mark out the low, okay? Once the liquidity's been taken, I mark out the low with a point of invalidation, so it will go there, bang, right? Red line, point of invalidation, because what that means is, it means if price keeps going and breaks it, it means that's not the bottom, okay? So it's so simple. You just keep moving. You would just keep moving your point of invalidation down. So you are stalking price and you're waiting for it to reverse, right? So it's very simple. Right. So I mark out a low, okay, and then I mark out the last high. Okay, so for me, when price came down here, it made a high, then it made a low, right? This is called a failed low. So what I do is I'll mark out this high here and I'll make this green. This is called my breakout line. Okay, so what I'm looking for is price to now make a failed low, which it did here, yeah, and then make its way back up and break, retest and go, right? So this is basically my swing high and my swing low. So whatever happens in between here is now basically where my reversal is going to happen, right? And this is my entry strategy. I do this every single day. Now, okay, the first thing you want to be looking for, yeah, is your low, okay? Once it makes a low and doesn't look like it's going to basically break your low, you mark out your high, which is here, right? So you're now playing within this range, right? Now, what you need is price to turn around and momentum to shift towards the upside, right? Now, you can't just take a buy. So the entry strategy is you take a buy when you have a confirmed failed low. You need to have a confirmed failed low. And don't worry, this doesn't happen like in a split second. You have time to react. So you have time to read what's going on here, right? But what you want to be looking for is, can you see like the wicks, the rejection wicks, and the green candles are now becoming bigger. So the bulls are taking over. So this is basically a shift in momentum. So price has come down and is now shifting towards the upside, right? So what you're looking for first is the low, and then you mark out your high. Then you're looking for your failed low. Now, this is the trick. This is what's important, right? You need a higher time frame candle. Okay, so a 5, 15, or 30-minute candle to close above your breakout line. It needs to close like that. Okay, like that, a higher time frame. You cannot rely on a 1-minute candle to break above, because look, that one broke above and then it came back down in here. It doesn't count, right? So what you're looking for is a candle of higher time frame to close above your breakout line. Okay, this is your entry line. So once you get a candle closed like this, you're entering, right? So let me just allow the replay tool to play what happened, right? Okay, wait for it to leave. Okay, can you see how it never broke this low? Okay, so the momentum shift has happened, right? But it's not confirmed until, let me just, now, the reason I'm letting it play, right? But listen, we would have entered around here. Let me show you exactly what I'm looking for, right? So I'm going to jump onto the 5-minute chart. Right, here we go. Right, so here we go. So I would have marked out my high, yeah, here. There's my failed low. This candle is my entry candle right there. This candle, I would, as soon as that closed, that 5-minute candle closed above this line, I'm entering my trade and it's going to look like this. Bang. Okay. Stop loss. If we're right about this level, it's not coming back to take us out. Okay. It may do a little sweep, but we will, based on ATR, which is average true range, right? From this point here to here, 5 pips. This is what my trade looks like every day. I do the same thing every day, right? Just there, right? Bang. Okay. So my stop loss from the entry line to here is 20 pips, right? So this is what my trade would look like. Now, it can do this. It's not a problem. So this candle tells me momentum has shifted because we've got a break of structure with a high time frame candle. Now, if you get a 15-minute, oh, look at that. Okay, but I think this candle, actually, yeah, this candle was after our breakout line. Okay, so if you was to get that, you can wait for a 15 if you want. If you was to get a higher time frame candle like that, close above your breakout line, that's your entry as well. But you don't have to, I mean, it's better to wait for a higher time frame candle. But once you get that signal there, that candle breaking that line, that's your entry. That's when you take your entry. Right now, what you can do, because obviously the distance from that candle closing there to the actual breaker line is quite far. You can wait for it to come back and retest, and that's what it did do, and then go. Right. So you can wait for the retest. But what I found with GJ is once that candle closes above that line, she will shoot off like that. You don't really sometimes get a chance. So really, the lowest candle you want to wait for is a 5-minute candle to break your breakout line. And then it's nice to see a 15 or 30. So let's just have a look at the 30. Right. So if you was to get your 30-minute candle, hold on. If you were to get a 30-minute candle, what about an hour? Okay, you didn't get an hour. One sec, let me just get rid of these drawings, one sec. Okay, you didn't get the hour. Oh man, I just want to get rid of these little drawings. So, right. Okay, you didn't get the hour, but it's nice to see it. Okay, let's have a look. But you would have been entered here. And the fact that it hasn't taken out the low, it means that the momentum has shifted. What did we get here? Okay, so if you got this 1 hour candle close above, you know it's definitely going up. So let's just play the replay tool a little bit more. Okay, cool. Right, let's just go back. Sorry. All right, the fact that you've got so when you take your trade, right? Can you see how if you're right, it's not coming back. 5 pips underneath that swing low is enough, okay? Because it's not coming back. But if it does decide to come back, right, it will not take you out if that's the low. So what this has actually done, what's actually happened here? Oh, we lost our indicator. Yeah, we have. One sec. Let me get my. Let's get this back on the chart. Okay, cool. Yeah. If you get. So let's put this back. Okay, cool. If this is the low of the day, okay, and liquidity has been taken, it's not coming back, right? And it's going to give a good push. So basically, just to recap, right? The whole concept is price has a target that it wants to go to up here. But before it goes there, it has a short-term target, which is the liquidity here. So my intraday strategy in a nutshell is price will make an impulsive move towards liquidity before going to its final destination, all right, which is up, all right? Or some people could say liquidity there, whatever, but buy side liquidity, whatever, sell side liquidity. I'm not an ICT trader, but it's all the same stuff really. Okay, cool. So just to recap, right? Sorry if that was a bit intense, but you can always go back on this. But that is my entry strategy. That is how I catch bombs. I catch GJ on the 1 minute chart, okay? And I will catch that, okay? This is why my trades have got such high risk to reward, is because look at that trade. Okay, so let's play this a little bit longer. One sec. Where did we go to? Okay, so we went all the way up there. Okay, cool. Right, enough of that. Right, let's just drag this across here. Right, bang. Okay, so 70 pips, right? 70 pips with a 20 pip drawdown. Yeah, that's a 3.5 to 1, right? Now, I will do another video on risk management. Okay, I'm not going to go too deeply into it, right? But if you were, say, for example, let's just say you hit that with a 5 lot, yeah? And your stop loss was your stop loss was 20 pips with a 5 lot, yeah? You basically risked $1,000. Let's just round it up. I know that it's $7 per pip, but let's just round it up to $10 a pip, yeah? Say you took this trade and you hit it with a 5 lot, right? So if you got clapped out, you would have lost $1,000, right? But you've risked $1,000 for $7,000. Let's just round up. You know what I mean by that. $7 a pip. It's that's what it actually is. But let's just say it's $10 a pip, right? You've risked $1,000. Sorry, not 7K. It has to be half of that. 3.5. So you've risked 1,000 for 3.5. So that's why it's a 3.5 to 1. So that would have been if it was a 10 lot. But see that type of risk to reward. That's what's basically gonna make you decent money. So that is a textbook London drop. Okay, so it literally says in the name, it's what the London session does after it comes out of the Asian session range. All right, so the impulsive move was a London drop and to continue in the direction of the trend. Right, it didn't take out the low. Okay, which basically meant this is pretty much the start of an uptrend, right? After having, as you can see here, sorry, let me get you on there. We were making a move down, right? And we've, attempted to catch the bottom here, right? But we have made a nice impulsive move. Now, another thing to take into consideration is the previous day, which is here. So this was the trade we just went through. The previous day has swept like anything that was here. All right. So that means that it's, you know, could be good to go for a move up. Right. So that's also something to take into consideration. It's all about liquidity. All right. It's not going to leave liquidity on the table. It's not going to leave the only, you know, I mean, if this was the higher low on a higher time frame, yeah, this is the only trade that was safe, right? Because any other, you know, intraday, you know, trade you get, just say these are intraday trades, yeah, they are all creating liquidity underneath here, and eventually it will clap it all out and then go if it wants to go up, right? That's what will happen, okay? Because all of this is easy money. This is all people holding these types of trades. This is why I don't really hold trades. If I'm doing intraday, I'm in and out during the day, right? Because these guys, okay, so just say this is me and I'm a little bit of a newbie and I don't know GJ that well. I will put stop loss to break even and I'm holding for the moon. But what you need to remember is everyone is doing that. It's an easy liquidity target. So this guy will come and sweep and take you all out, and that's it, right? But what might happen though, sometimes they sweep the whole thing, but sometimes they don't sweep this one. They leave this one alone. So they do everything under here apart from that. But you still might get a wick, right? Which activates all the stop losses. And then this gets everyone who's holding from this gets taken out. That's why GJ is better to come out after the pushes. So that 70 pip push, who's not happy with a 70 pip push, be happy with it, take your money and enjoy your day. So yeah, that's basically my London drop intraday trade from top down analysis. So it's from top to bottom, what I go through on a daily, like what I look for, the pre-market checklist, and then basically what a trade would look like. So I did actually catch that move, by the way. Like I said, there's not much I miss with GJ, and I only trade one pair purely because of that. I know the tricks that she's got. I know what she's. I not that I know like what she's going to do, but I know what to expect. I know what she's capable of. And that's basically it. So if you have any questions, add me on Instagram, drop me a message. I'll try and be as helpful as possible. I'm still quite early in my journey, and I'm really, you know, just trying to give value, trying to give back, because I know that, you know, giving back is the way of, you know, like sharpening my skill set, going over my breakdowns, things like that. It's really going to make me a better trader if I repeat the process over and over again. Also, sorry, just one thing to add as well, because we had another level up here, guys. You would have been looking to take profit because, as you can see, on a bit of a higher time frame, you are getting a bit of rejection wicks. So taking it from this zone to this zone is a, you know, a healthy trade, 70 pips. But also you've got the downtrend, you know, trend line here. So it would have been wise to take your profit here. Another thing, one thing I just want to point out as well, right? Like I said before, right? I will only buy GJ. All right. Now this is a counter trend. This is a bounce. This is a 70 pip bounce. Can you see why you can still be buying in a counter trend? I'm going against the trend and I'm still catching these moves. Like I'm still catching. These are big moves. Like these are big moves, especially if you're entering off the 1 minute chart, right? And you can get in with a 5 lot or a 10 lot, right? This is a serious, this is, you know, this is 5K a day material. You can really make 5K a day. Trading, I know a lot of people are going to say, oh, you shouldn't be trading against the trend, but I know how to trade a reversal pattern off a level of support. Okay. I'm not interested. I know it's the other way around. Selling is the same thing the other way around, but I'm just good at buying GJ off a support. And I do it every single day. I do the same thing every single day. And I take it up 50, 60 pips and I'm done. All right. So yeah, so the party really starts when this reverses and we start going like that, okay? Because the pushes are massive. The pushes are like 200 pips. You can catch a 200 pip push in a day. You can even hold your trades overnight. You know, it does correct and take you out if you're, you know, if you're this high up in the trend. But if you're catching the higher lows like that one, the significant higher lows, price doesn't normally take you out. But if you're catching the smaller moves on the way up, so like the little ones there in between the higher lows, then yeah, you're going to be internal liquidity, so you are going to get clapped out. But if you're catching the major ones off the major higher lows, you're pretty safe to hold. And I've held trades I've held trades for two to 300 pips before GJ swings. It happens. It does happen. So yeah, that's it, guys. So like I said, if you have any questions about this, just message me. I'm also going to drop a link in the video to my playbook, so you can actually see the rules to this play. The London drop is called. So if you want to trade it, you have the rules set out, so you can follow the rules. So yeah, that's it from me, guys.